Hello everyone, welcome to the newsletter for April 18th. So we've just had, within the last hour, a great little crash. We've crashed down to, we've got down to about, what, 51,000, surprisingly. So I know in previous newsletters I said we really don't want to be closing below 55 as being a not so great signal. It means that we've essentially traded down below that $1 trillion level. And again, we've got our friend the Dalai Lama here, who I kind of think this is probably what's going to play out. Bitcoin likes to play these particular maneuvers, and really it feels like a bit of a panic sell by retail at this point in time. Most likely driven by this hash rate drop. So we'll start by looking at the hash rate drop, then we'll run in and we'll have a little bit of a view of who is actually selling into this rally or this sell-off, and just get a bit of an understanding of the mechanics of what's going on. But look, it's not the best thing to have happened, but at the same time, I think by and large this was driven by leverage and liquidations. I think this is a derivative sell-off rather than a fundamental sell-off, and therefore I actually believe this is actually a buying opportunity. So I really do think that this Dalai Lama GIF really plays it out. To be honest, I think it's one of the funniest memes in Bitcoin, because it does seem to play out this way. I scroll back through the chart, and we get these things show up all the time. These just precipitous drops, followed by this nice little U-shaped pattern, and then a rally to the upside. And I can certainly see that playing out here. So let's get rid of him, and we'll carry on and look a little bit more at the mechanics of what went on with this. So WWAN does a reasonable job of providing Western Twitter with Eastern insights, particularly when it comes to mining pools and retail inflows and things. So there's two sets of tweets we'll look at, but one is that in Xinjiang, there was a power outage due to a coal explosion. So we had basically a 30% to 40% drop, depending on which source that you're looking at, in hash rate. So it kind of demonstrates, and this wasn't the whole province. This was just one particular section of the province, and it shows you that there is a lot of mining that goes on there, right? It is a relatively centralized security mechanism in that sense. But it gives a bit of an idea about what actually happened. She's got a tweet down here saying, here we go. So most of the pools affected, I mean, some of these are down 24%, 18%, 30%, 20%. So it gives a bit of an idea about what was going on. I think that by and large, this is probably what's driven this sell-off, is people who just don't fully understand. They see a 40% down on anything, right? They see a chart that looks like this and they panic. And simultaneously, we broke above that key level for of 60, what was it, 60,000 was our ceiling before, in the lead up to Coinbase. And the Coinbase chart really hasn't impressed anyone, right? It's been fairly unimpressive. I think people hyped it up too much. A little bit of a buy the rumor, sell the news. We really didn't get lift-off velocity coming out of that big ascending triangle pattern. So look, it kind of does depend to see how the market plays out with this. My gut feels it's going to want to go back and at the very least try and retest it as a swing trade. Whether we can then break above it again and hold it is a different question. Maybe we're in for a more significant and lengthy consolidation, but we will see how this plays out. So the other one that I want to bring up that she mentions is that Tether was trading as a premium, right? And this is recent. This is actually today, about an hour and a half beforehand, before this recording. So she's basically saying that this is Chinese retail. So what she's saying here is that new retail is coming in China, and it has a double-edged sword. First of all, there's new people coming in, new money. But the other one is that it's generally bad because they're impatient money. They don't care about fundamentals. They really want aggressive price. So, this is really what the euphoria rally looks like. It's absolute shit coins rallying to prices that you could never believe, all forecast by Dogecoin. So I think this is probably the signal that we're starting to move into that acceleration phase. So look, it'll be exciting, but I think it's time to really start thinking about how you're going to manage risk on the end of this. If you are going to manage risk, if you're going to sell spot, or you're just going to trade derivatives to hedge it, whether you're going to consolidate your altcoins, whether you're going to take some altcoin trades and start thinking about what the euphoria rally may look like. So there's a few charts here that I want to look at before we get into, hang on, so we'll look at our hash rate first. So this is on Glassnode. Here's another, like back here in March, we had a Dalai Lama maneuver, right? So we had one back here. I looked through a couple of these sell-offs on the way. You know, we have this pattern on a regular basis, so it is a Bitcoin special. But in terms of our hash rate, you can see that the dip, I mean, really, this was, to be fair, I forget what this event was, but there was an event back here that had a very similar magnitude fall off. You can really see that in terms of hash rate, it's not that special, right? This is a fairly standard type event almost. If you look at how many of these of very similar magnitude we've actually had, it really shouldn't be setting off any alarm bells, right? This will recover. I think even in the last couple of hours, we've started to see recovery in this hash rate. I generally think that this is, if this is driven by hash rate driven, or sorry, by speculation and people panicking because the hash rate fell, then ultimately this should recover. I think that probably the more important question, let's just have a look at our open interest, because I think that's an important one. We'll look at our open interest and then also at the liquidation rate, because I've seen numbers out there of $9.6 billion that were liquidated during this sell-off, which is you know, I mean, that's truly spectacular. Let's look at stacked, because that's always a bit more colorful. Yeah, I mean, 9.6 billion in liquidations is just, I mean, that's a spectacular number. A lot of people would have had this go against them, and simply because of the magnitude of the drop. And, you know, normally when we get these high magnitude drops, it becomes fairly common that we generally retrace the largest chunk of it. So, oh yeah, I can already see it here. So you can see that we hit an all-time high of 25 billion, almost 26 billion, and it collapsed down to, where are we here? 20, no, hang on, we might have to go in a bit closer, and I might turn off all of our moving averages. I see why we're running on the hourly. Okay, so let's zoom right into what happened today. So we were up here at our peak at 25.5 billion, and we're down to 22.3 billion. So that's about $3 billion, according to Glassnode, that was basically wiped off. I suspect that as more data comes in, this will continue to flesh out. But, you know, there's a lot of leverage in this system. There's a lot, and look, this is not really a surprise to anyone. I don't think it should be. You know, we've got high leverage. We've got a Coinbase rally that didn't really hit the mark, and then we've got hash rate falling. It was just a lot of things that really, I mean, let's flush the leverage out. It's probably not a bad thing at the end of the day. So that's the kind of overview of what happened. I don't think that there's anything to be too concerned or upset about. I personally think that this is a buying opportunity. But my original call, and we'll look at this in more detail shortly, but my original call of I really don't want it to close below 55. We'll look at our price distribution to just kind of verify where that is. But just before we do that, I want to look at that second tweet that Dovey had out on the number of new people coming in. So there's a few charts here that we've got that we can actually have a look at. No, that's Coinbase destroyed. Sorry, I opened up a bunch of these before. This one here. Okay, so what Glassnode defines as entities are basically entities on chain that can be, at the very least, by our algorithms, determined to be unique. So if you withdraw coins to a new address and it's never interacted with any other address, then it's going to be classified as a new entity. So it's kind of showing how many new wallets are growing on chain. Of course, that's not going to necessarily account for each person, but you know, if someone's dollar cost averaging and putting in $5 grand or $2 grand or $1 grand or $100 every single month or week or whatever the time scale is, then it doesn't really matter if they're separate people. It kind of matters that they're just it's a new purchase, right? That's how you can kind of think of this. Now, I've filtered this down to basically retail, right? Anything under one coin. You can see, and what's important here. So let's look at our 2018 rally. This is kind of, let's call this our baseline accumulation gradient, because this is basically describing in the bear market what are the people who actually get it accumulating. Now you can see that after the capitulation event, accumulation really started to pick up, right? Now again, the gradient will go up because the price has gone down. So when the price goes down, you're just buying more coin, and this is showing a percentage of overall supply. You are just buying more coin with each dollar, right? So, and that trend generally lasted through all of 2019 and into 2020. Then we had our major sell-off in March, and you can see that we had another acceleration of this. So this was the macro. So this is bear market accumulation, capitulation buyers, Then we have the macro, oh shit, Bitcoin is now a global asset and is becoming extremely important. And now we've just transitioned into a brand new trend, pretty much from our peak up here at 39,000. Or 42 is where that one actually peaked off. So what that's really telling us is that retail has entered from this point, and you might even be able to see, let's just zoom in a little bit closer. You can actually see that in the last little while, it's actually started trending higher. So this is telling me that retail is coming, they're here. It's why I think we have to take that framework of new retail, they're showing up on chain. If we look at our new entities, you can see that in the last couple of days, that's really, really spiked up. So this is actually looking at how many new entities there are. Let's zoom this guy in. You can see that we've really had a spike up. So we're starting to get to that point in time. And the last one I want to look at is exchange balances stacked. In particular, I want to show you the Binance chart, because this is really, it's just telling me that that's what's going on. We now have retail punters in here starting to really spend big on altcoins. So there's Binance, right? You can see Binance's wallet is just going through the roof. Between Binance and Coinbase, we still have an uptrend in, so Binance as of recently is now offsetting the downtrend in Coinbase. So that's something to certainly pay attention to. If we put all of our exchanges back on, I just want to show you the magnitude of those two exchanges, really, that they changed the game. So everybody's used to seeing this perpetual downtrend chart. Let's look at it on a 2-year basis. Everyone's used to seeing this perpetual downtrend. Everyone's going, yeah, exchange balance is going down. Well, let's take out Coinbase. You can see that since 20,000, it's actually been in an uptrend, right? But now let's take out Binance, who's really, you can see down the bottom here, is the one that's really kicking that up. Let's take Binance out, and we're basically back to flat and then into a downtrend. And if we put Coinbase back in, significant downtrend. So I think that's just something to be aware of, is just the role, how significant Binance is, and that it pretty much offsets Coinbase at this point in time. And that is telling me that retail accumulation is here and coming. And you can see that the magnitude of Binance is, what have they got? 430,000 BTC. Coinbase has Coinbase 770,000, and then the next highest is Huobi, which is 188. So, Binance is the second largest by a significant margin, almost double. So I think that's the realm that we have to start thinking about. That's what we're in the, I believe that we are now in the euphoria phase, the retail-driven speculation. It's time to have a lot of fun. It's time to exercise risk management. It's time to, this is where altcoins are going to do stupidly well, right? Now, again, we have to see how this whole this sell-off fleshes out, right, and plays out. But that's I think where we're heading into. Once we get this correction out of the way, and whatever it ends up looking like over the next couple of months or weeks, I really think that that's where we're headed. So it's going to be exciting. It's going to be crazy. So let's do let me just refresh this, because everything's changing pretty quickly at the moment. We'll have a look through and see what the old hands are doing, because I think that'll give a bit of an insight. This guy give a bit of an insight into what we can really expect. And then we'll look at some cycle charts and go from there. So here's our realized price distribution. Previously, we were trading up here. It was nice to see a bunch of volume actually get traded up here, but you can see that we've actually fallen down below the largest node. So this really isn't ideal, and I'm not excited by this. We're still inside the zone, so we're still above $1 trillion. I would be very surprised if we broke below, but again, this market is a, who knows what's going to happen from here. This could become resistance. It is possible now. So just be aware of that. As of today, so this is the amount of volume that's actually moved only today. And you can see that we're 150,000 at the current price bracket, plus, what's this guy, 130. So that's 280,000 BTC has moved today alone. And if you look at the total transfer volume, the thing is just absolutely moving in US dollar terms. So there's no question that there's volatility and there's volume going on chain. It's something to be aware of, that maybe this is going to become resistance. I don't think it will, but there is obviously a risk. It's now a much more probable outcome than it was, 2 days ago. So that's certainly something to just keep in mind. What have I done? Sorry, broke it. So I think of all the risks, That said, we've obviously wiped out quite a bit of leverage. So that's a positive, right? That is a good sign. That's really where we want to be at this point in time. And ultimately, a retest of the $1 trillion mark and then a bounce would be extremely bullish, right? Again, if it breaks below, extremely not bullish. If it breaks above, extremely bullish. Now, in terms of our lifespan metrics, so these are old hands, we've got a slight uptick, but again, it's really not it's not confirming a new trend. Maybe it will. Maybe as we move into this euphoria rally, I think I've mentioned before that I strongly suspect we will see an uptick in these lifespan metrics as we move towards that peak. Simply because I think it's getting to that phase where we've essentially got old hands that will start taking profits and selling onto young noobs, right? This is what's going to happen. So I wouldn't be surprised if this reverses back to the upside. Same for dormancy and Coindays destroyed. So there's 60,000 is probably the base of the next bear market. Is kind of what I'm seeing. Maybe it's a bit higher, but it feels like that's the kind of the level that we're at. You can see that our binary Coindays destroyed is finding a bit of a floor, and some of these peaks are actually starting to pick up. So there is a bit of momentum to the upside there. We mentioned our new entities, so we've got the growth rate of entities is just going through the roof, and our net entities is growing as well. So overall, we've got new people coming in. This is really what this is telling us. If we look at our SOPR, so this is the amount of profit that's being taken out of the system. So when people are actually cashing out, what you can see here is we're actually resetting on both of these metrics. So you can think about this. My favorite metric for these is it's kind of on-chain funding rate. Is almost how I would consider the SOPR. It's a bit of a funding rate analogy. You can see that in all of our bottoms on the ASOPR, we haven't quite got to a full reset, but that's okay, right? It's still saying that the amount of profit being taken is far less. So it's overall positive sense. Let's bring this guy back up here. So, and actually just before I forget, let's actually look at our funding rate, because I think this is what triggered me to actually take a position during this sell-off. I think we're down at 51,000 on spot. But on, hang on, let me go daily. So we're down at like 51,000, but the futures were trading at somewhere in around 49,000. So basically it was telling everybody that the perpetual swaps were trading substantially lower than spot rate was. And the funding rate on Deribit, where I was looking at, actually went, let's see if it's on here, Deribit, it went to -0.5. So it was basically something like 600% annualized, some stupid number. And basically that was a signal for me that the market has just oversold this thing, completely. I think there's probably a bit of a lag in the data here. I suspect that all of this will fully reset down here once the next hour candle, daily candle gets printed in. I wonder if we could actually go hourly and just look at this. But overall, on-chain, I would say that the funding rate, or the SOPR, is more or less reset. On the funding, at least from my anecdotal experience, I certainly saw funding go significantly negative, which was my buy signal, because it just meant that the market was completely overheated on the downside. Yeah, you can see that some of these have actually dipped down into the negative zone, and we've had a bit of a bounce recently. Maybe we get one more leg down and really just scare people, but overall it's feeling pretty confident. So in terms of our position changes, so I mentioned a few times that we've had all of the accumulation that went on 6 months ago, or 5-6 months ago, and they're all going to start maturing soon. So we can see our long-term holder position change is now going green. This is starting to get into the $20,000 or the $18,000 buyers. They're starting to go green. Miners are back to accumulation. Miners have gone back into the green zone, so that's overall positive. Miners aren't obviously liquidating. And we've got our hodler position change going up. You can see that our balance on exchanges, we looked at this in more detail, but on aggregate, it's still trending down. But being aware that coins on Binance can be liquidated at any point, and our illiquid supply change, you can see it's actually hit I think this might even be an all-time high, or at the very least, it's a high over the last 2 years. And this is basically, again, this is reflecting what's going on here, just the volume of coins that were actually being accumulated. And, compared to where we were at 42,000, it's, it's positive now. And the last thing we can look at is these hodl waves, and in particular the realized cap hodl waves, which is basically like it's the same metrics but amplified. It's amplified by the amount of movement that's going on in those age brackets. Whereas the hodl waves is the explicit how much supply they are. Realized cap is kind of like an accelerated version of it. Now, what I want to really point out on the realized cap hodl waves is this orange band here. So this is our 1 week to 1 month. This is our 1 month to 3 months. And then this dark brown color here is our 3 months to 6 months. And you can see that on a relative scale, how much more supply has been absorbed by those bands, right? So call these young coins, but also we're seeing that our dark brown here, which is our 1 to 3 month, is expanding. The amount of brand new 1 week old coins is actually going down, shrinking. So we're getting more of these coins maturing into this 1 to 3 month band. And you can actually see here that we're getting this widening up of this dark brown zone. So that's really telling us that we've actually got our 3 to 6 month old coins, which lines up with our illiquid supply change and our long-term hodler change. So this is telling us that coins that were accumulated back in, between 3 and 6 months ago have been hodled. They have not been sold. And overall, that's pretty positive. And what we really want to see is this next band above that, just the 6 to 12 months, which in 3 months time, or, when was this? When did this start? This started in March. So sometime in June, we should probably start seeing this brown one start to really open up. So that will be a positive sign. That will show how much coin maturation we've got going on. You can see the same thing going on in our hodl waves. So if we take this level here, we're somewhere in around 30% or thereabouts. If you take all of those young coins together, and we'll start to see this brown layer here really start to expand out. So overall, if I was to kind of give a bit of a summary on where I'm seeing it, on a fundamental basis, this feels like a panic sell. It feels like a liquidation event, flush and leverage out of the system. I don't believe there's anything fundamentally flawed that's going on. So because we're in a bull market and we're seeing the amount of retail entrants, and this is a significant dip, I would not be surprised if we don't, whether we take out all-time highs, I don't know, but I do think that we're probably going to put a bottom in sooner than people expect. So, I don't think there's anything at the moment to tell me that we should be swapping our bias. If there's anything that's going to make me start to change my opinion, it's going to be closing somewhere below 55,000. I mean, really, that's the key level. If we close below 55,000, I think that really is cause for concern. That's where I'd be changing my strategy at the very least to be considering a temporary shorter term, longer correction, right? So I think that's probably the way to think about this. From an on-chain perspective, it actually all looks very good. I'm not seeing panic selling by old hands. I'm not seeing any mass exits. What I am seeing is liquidations and derivative led. So, we talk about on-chain being a 3 months to 6 month plus type time horizon, whereas derivatives will normally drive things within the next week to the next month. So overall, I think we just got hugely bullish. Everyone bet on Coinbase being an absolute moon mission and didn't play out as such. And then I think, essentially hash rate was the trigger. I'm sure that there would be some whales in there who go, right, this is our chance to fleece some money and make it play. So, my overall view is stick with the Dalai Lama. I really do think this is probably the pattern that we're going to get play out. And overall, should be good from there. If not, we can change our strategy, and 55K really is the level to watch. Thanks for tuning in, and I'll catch you in the midweek. Cheers.